Good morning, guys, and welcome to your market report for this January 31st, a Thursday. Now, listen, guys, I'm going to tell you what. I'm going to do a short, sweet market report this morning. Here's the thing. The markets have been drained of liquidity now at this point by the Federal Reserve. And the Federal Reserve is still doing $50 billion a month of liquidity. They're draining out from underneath the markets. And the markets have been buoyed on news that the Fed is going to stop these programs, basically, of raising interest rates and draining liquidity, but they haven't done that yet. And so at this point, what's happened is the markets, the underpinning of the markets since the 2008 crisis until now, is not there. So if any little thing, pinprick, comes along in the world, a situation like if it starts to look like Britain really will leave the European Union with a hard Brexit, or something like Italy starts to get in trouble again, or China posts some bad numbers, anything like that could set it off, because it's ready, and we could see a massive decline in the market because the market is not supported right now with liquidity. It's not awash with liquidity. The liquidity's been drained out. So let's get in there and let's take a look at these markets today. Let's open up the charts right here and let's take a look at what's going on. The first thing we're going to take a look at is Bitcoin. Bitcoin hasn't been doing anything. $3,411 right now as we speak. And it's just basically been going along ever since it had that big drop down to 31.22. It's just been going along like sideways. No energy either to the upside or to the downside. Basically, it's just stabilizing along at a certain price. What more can I say? There's not a lot to talk about there. But now the silver and gold price. Silver's been buoying. If we take a look at silver today, she's buoying upwards. She's 7 cents today. She cracked through the $16 mark, $16.11, and she's on her way up. I think that as long as things continue, as long as we don't get a market crash, or as long as things continue relatively stable, I think we might be starting to just come into a bull market again, slowly. But at this point, we're not there yet. The world is very unstable, and the thing is if we get deflationary pressures, it could put deflationary pressures back on gold and silver. But investors are getting scared, and gold and silver are starting to heat up there a little bit. They can sense there's something coming, something big this way comes. And I'm going to tell you, I can really see it coming too. Let's take a look now at cryptocurrency market capitalizations while we're here. 113 billion. It's been there. It's just not doing anything right now. I think cryptocurrency is going to heat up again. But we're going through that little period before it starts to heat up again, and where it just kind of goes along sideways. There was a chance that we could have had a market fall off in cryptocurrency, but the longer we go sideways like this, the less chance we're going to see that market fall off where it goes down and it breaks through support. Less chance we're going to see that. The longer it goes sideways, the better for cryptocurrency. Now we're going to go through the Dow today, and right now she's down 142 points. She's at 24,872, and like I say, this Dow right now is in a precarious position. This could actually be a dead cat bounce, what we're seeing right here, if things don't turn out right, because they've drained the liquidity out of the market, and because the market was so oversold. When it was up at 27,000. It was so oversold, and so much fresh debt money has come into the market. And now they're draining that money out from underneath. I mean, it's a no-brainer that we could actually see a market plunge if things don't go right. Anything could set it off. Let's take a look now at oil. Oil's up 69 cents on the day, 1.27%. And it's at $54.92 for sweet light crude oil. So we've seen an increase in the oil price. We set our bottom in at December 24th, 2018 at $43.93. And since then, we've seen it climb over $10. And it's been a slow climb. So oil is doing all right, boys, and it's probably going to continue to rise because it's in this rising trend. Oil prices go up, that's inflationary for the dollar. It means that you can buy less oil with the dollar, and after all, it is the petrodollar. They don't call it the petrodollar for nothing. Of course, you know they're undermining the petrodollar all the time. You know, Europe, ever since they put these trade sanctions on Iran, you know, Europe is making ways of bypassing the dollar, and so's China. They're bypassing the SWIFT system. Now let's take a look at bonds. Oh, they're buying in big today. Boys, look at this. Over 3 basis points on most of the almost 4 basis points on almost all the bonds across the board, except for the short curve. The 3-month is only 1.3 basis points, but we're looking at 3.9 basis points on the 10-year. They're buying in heavy to bonds today. Money's moving into bonds. This shows fear. And that money that's moving into those bonds could suddenly jerk out of the market, quite literally, because the market's already been drained of liquidity, and if more liquidity drains out to buy these bonds, and this is what they're buying as a safe haven asset. They're not buying gold right yet. They're not buying cryptocurrencies or anything like that, like we are, the common ordinary people, but the big money, the big capital, they're scared right now, and that's why they're moving today into these bonds. They're frightened. They're frightened. They're pretty smart, you know. They can see this thing coming. They can see this recession coming, and they're heading into bonds big. Look at these numbers. Look how much they've bought. Almost 4 basis points. 3.7 on the 10-year, 3.7 on the 5-year. They're moving heavy into bonds today. Let's take a look at the dollar. Oh, man, look at that. It's just dropped a penny. It's dropped a penny. When did it drop a penny? Because it was 96 point something there. Now it's 95 point something. Let's go back to the 5-day and see if we can see when it dropped a penny. Right here. Okay, right there. It looks like around 2 o'clock p.m. Eastern Standard Time, and it was it just dropped. Poof, right there. By 2:40 it had dropped. 2:40 on the first 30th, so yesterday, 2:40 p.m. She just dropped, plunged, just at the plunge right there in price. So we see that the dollar's down, and you know this is reflecting in the gold and silver price. You know, the more this dollar drops, and this is on this news of the Fed. Just not the Fed really doing anything, just on news that they're going to, and the market's buying into that. And it's extremely bullish for gold and silver, and it's bearish for the dollar. But you know, I'm going to tell you, if the Fed is just head faking us all, and they really don't do anything, if they start to raise interest rates again, and they continue with this monetary policy of sucking $50 billion a month out of the economy, well, we're going to see the opposite effect of this happen. You know. So anyway, this has been your market report for this morning. Thank you guys for tuning in. I'm a little bit late today. I'm going to get this right on the air as soon as I'm done. Thank you guys for listening, and like and subscribe, and we'll catch you in the next show. Bye-bye, guys.